we're seeing a gold spike. I first bought gold at 100, I think $163, $183 an ounce back then. We're seeing a gold spike now that's comparable to back then. And the reason being is the geopolitical and economic instability that we have never seen since World War II. World War III has already begun. Gold to me is, again, we have no advertisers in the Trends Journal. We have no commercials. Nobody tells us what to do. And I've been at this a lot of years. I've never seen gold take off like this before, other than when the Iranian war broke out. And this is worse than that.
Gold's returns are getting hard to ignore. The precious metal has been hitting record after record, with investors looking to safe haven assets in the face of uncertain U.S. economic policy. For gold to be in a genuine secular bull market, it must outperform conventional assets like stocks and bonds. March 2024 marked the beginning of gold's outperformance against these traditional investments, providing initial confirmation of the new cycle. Gerald Celente, renowned trend forecaster and publisher of the Trends Journal, is known for his bold predictions. In this video, Gerald Celente calls out the media for ignoring gold's sharp rise, seeing it as a warning sign of looming chaos. He believes today's economic instability surpasses even past crises like the Iranian conflict. He particularly warns of World War III and predicts that a major event will soon make the crisis official in the eyes of the world. Over the last century, several global crises have triggered a massive surge in gold demand. It leads to sharp gold price increases. These events have ranged from financial collapses to wars and pandemics, each driving investors toward gold as a store of value. Looking at fundamentals, Celente condemns figures like Churchill and Kermit Roosevelt for toppling Iran's democracy in 1953 to protect oil giants, fueling lasting instability. Celente recalls predicting the 1979 Iranian crisis and investing in gold and oil. Drawing parallels to today, Celente believes the current gold spike resembles the 1970s, driven by global turmoil unlike anything seen since World War II. The current setup more closely resembles the conditions of the 1970s than the 2000s or 1930s, suggesting performance potential closer to the more explosive 1970s advance rather than the more limited 2000s cycle. The 1970s bull market saw gold surge 2,300% in nominal terms, while silver exploded 3,540%. By comparison, the 2001 to 2011 bull market delivered more modest gains of 648% for gold and 1,165% for silver. Before diving into Gerald Celente's sharp insights from his latest interview, hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the markets. Let's get into it.
Not an article in the toilet paper record, the New York Times, or the Wall Street Journal about spiking gold prices. They just had one in the Wall Street Journal. Gold goes up $100, over $100 an ounce. Not a word, not a word. And the reason being, gold is signaling danger ahead. When gold price, I've been at this, here again, these are my books. There's one of them. Trend tracking, far better than Megatrends, Time Magazine. 1988, I think. And this was an international bestseller, Trends 2000. In my book, Trend Tracking, I write about how I became a trend forecaster. I used to work, I told you, before we went on the air, a major corporation, trade association. And I was living between Chicago and D.C., and the Iranian conflict started to break out in 1978. And they taught us to hate Iran, just like they keep teaching us now. And people had no idea of the United States overthrow the democratically elected government of Mossadegh in 1953 in Iran. The CIA and the MI6 overthrew the government because Mossadegh had the nerve to say that, that oil in Iran, that belongs to the Iranian people. And that little fat slob that everybody bends down to and loves, that little clown boy shithead, Winston Churchill, and Kermit Roosevelt, Theodore Roosevelt's grandson, the facts are all there. They overthrew Mossadegh because Mossadegh said it does not belong to Anglo-Iranian oil, better known today as BP, or Standard Oil, better known today as ExxonMobil. The oil belongs to the Iranian people. No, it doesn't. So now when the protests started happening, they had brought the Shah in, and the Shah was this little dictator. They brought in the Savak, the secret police that made the SS look good, that slaughtered tens of thousands of Iranians that protested. So when the protests began in the late 1970s, I said, this thing is real. It's going to keep going. and I played the gold and oil futures. I said, gold and oil prices will go up. That's when I became a political atheist. I no longer believed in the political system. Jimmy Carter came back from Iran from spending New Year's Eve with the Shah and his wife and said the Shah was the island of stability in the Middle East. It's a quote. In the Bronx, we used to say bullshit has its own sound. I said, this thing's going to go down. Going back to gold. We're seeing a gold spike. I first bought gold at 100, I think $163, $183 an ounce back then. We're seeing a gold spike now that's comparable to back then. And the reason being is the geopolitical and economic instability that we have never seen since World War II. World War III has already begun. There's going to be a major event that makes it, quote, official.
Regarding Jerome Powell, Gerald Celente recalls how the Trends Journal correctly predicted Trump would push for rate cuts during market turmoil. He points to December 2018 as proof of Powell's ability to cave under pressure. Celente calls it political theater, run by one big club that controls the system. A war of words over inflation and tariffs won't magically make interest rates tumble in the weeks ahead. And that's true even after President Donald Trump turned to his trademark name-calling by dubbing the Federal Reserve Chairman a major loser. The Federal Reserve Policy Committee's next meetings are on May 6th and May 7th. Most economists don't expect the Fed to cut the short-term federal funds rate, which influences many other interest rates charged to consumers and businesses, in just a few days. Moreover, Celente mentions gold's current surge rivals past crises, but today's economic instability runs deeper. He recalls how COVID lockdowns silenced 2019's global protests. With the dollar weakening and interest rates falling, he sees this as the early phase of gold's breakout. Let's get back to the interview.
Read the Trends Journal, it's right there. We said it when Trump got elected, that he will do everything he can if the economy goes down in any way to force Powell to lower interest rates. So now you hear all this crap going on now about, Powell saying this and Trump can't do that against Powell. Again, we only look at facts. So how about these facts? Let's go back to ancient history. December 2018. The Dow had its worst December since the Great Depression, 1931. What did Trump do? He was president then. He forced Powell to lower interest rates. Powell lowered them in January 2019. What happened? The stock markets had a happy day, didn't they? Oh, remember the repo crisis from this thing artificially propped up? Oh, forget about that. Don't talk about that. People have no idea. They have no idea. Again, you have to look at the trends and how they keep connecting, and you have to look back and look forward. So Trump forced him to do it again before he'll do it again. We said this from the beginning. Now, just to make this 1,000% clear, there used to be this great guy, George Carlin. He said, it's one big club and you ain't in it. Great comedian. His brother, by the way, Patrick, used to work for me. And it's one big club. Who was the U.S. Treasury Secretary under Biden? Janet Yellen. What was her previous job? The Fed head.
Yeah.
All right? It's one big club. This is all theater about Powell doing this and Trump saying that. It's all theater. Powell will do exactly what Trump tells him to do. Powell's nothing more than a ballless little prick, just to make it clear. A member of the club. Gold to me is, again, we have no advertisers in the Trends Journal. We have no commercials. Nobody tells us what to do. And I've been at this a lot of years. I've never seen gold take off like this before, other than when the Iranian war broke out. And this is worse than then because of the economic instability like we've never seen before. Again, going back to the COVID when it began, it was going down before then. Germany, again, the largest economy in Europe, and back then it was the fourth largest economy in the world. They were on the brink of recession in 2019. There were protests going on, and people forget this, all over the world. They were all over the world. Algeria, Lebanon, South Africa, Chile, Bolivia, all over the world. Oh, the French yellow vests. All over the world, people were taking to the streets in 2019 for lack of basic living standards, government corruption, crime and violence, all over the world. And then the COVID war broke out. Can't go out, can't protest. India, the farmers protest. All over the world, there were protests going on. You can't go out, locked down. That's how they stopped it. And by the way, I used to be on Hong Kong TV. Hong Kong's a city of 7.5 million people. In 2019, they were protesting against China taking over because they made the agreement after the British left, which they had never had any right being there. They were going to give Hong Kong freedom for 40 years. They would still be under China, but they were free to be who they wanted to be. And China changed that. Out of 7.5 million people, over 1 million people were taking to the streets, and over 1 million out of 7.5 million were taking to the streets in Hong Kong in 2019. I used to be on Hong Kong TV. We take a break, and I say to the guy, Frank, what's going on? Mr. Celente, we're not going to stop this. We're not going to let the Chinese take over. The Chinese couldn't stop them. Yes, they did. They launched the COVID war. That was the end of it, and now they're in total control. So things were going down before this. It was artificially propped up with all the cheap money they flooded in, and now it's going down again. And there's no way they're going to bring it back up. But as you said, they're going to keep lowering interest rates. And going back to that, the lower the interest rates go in the United States, the deeper the dollar falls. And the dollar's going down already. The deeper the dollar falls, the higher gold prices go up. Gold is dollar-based. So it's cheaper in other countries to buy gold. And they're going to keep buying it.
In the long term, factors such as inflation, central bank policies, and global economic trends influence gold price prediction. Analysts predict that the price of gold could reach $6,800 an ounce by 2040, estimating a rate of return of 7.2% per year. Are you prepared for what will happen if Celente's predictions continue to unfold? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.